I understand, like you were pointing out, that of course banks have their own issues that they need to deal with before they cut rates. But then, Dr. Gokarn, in some ways, doesn't the RBI have a valid point? If all the interest rate cuts that they're announcing is not seeping into the ground, is not having the desired impact, then why should they exhaust all the headroom that they have in terms of cutting interest rates? Wouldn't that be a fair argument to make as well?
Important consideration, because I think there has been a fair amount of debate about headroom. Very clearly, if the repo rate was at 5.5 and still remains at 5.5, you have at least about 300, maybe even 350 basis points of headroom if you want to get to a real rate of about maybe 1% or so. Because inflation, is going to 3%, so rough calculations. So the issue is whether you make all your moves now, because you have nothing to lose, or you do it judiciously. You sort of allow yourself some room in case there are further negative shocks, which we don't know, we're not anticipating, and you need some capacity to respond to those. But I don't think within this debate has it ever occurred, or has it ever risen, that do nothing is the best policy. There is a trajectory to monetary policy, there is a logic to the stance, which has to be persisted with. And I think having started this process in October, you have to take it to a logical conclusion, which is to use as much headroom in the time frame that you've set. So I thought that we had set up a pattern of 100 basis points roughly every month, which has been the pattern for the last 3 months, give or take a couple of weeks here or there, except for October. And we saw the shock that the October inaction caused the markets, even though we got cuts soon after that. I think that lesson was very important, that there is a certain flow, there is a certain trajectory that has to be followed. Whether the markets expect it or not and react to it or not, I don't think is the relevant point here. But I think we have to keep doing it. Credit will start to flow sooner or later. And the more aggressive the Reserve Bank is seen to be in pushing liquidity, I think the quicker that flow will resume. So there is a trade-off there. Deciding not to take action today may send the signal that, despite nothing to this effect being said in the statement, but it does send the signal that maybe we are not as concerned about growth as other people, as the outside world is, and so that's a very mixed signal to send.